You are listening to ChartingWealth.com for Wednesday, the 15th of July, 2015. What do we see going on in the total market, which is IYY? This is an ETF, an exchange-traded fund that tracks the total market. We see for the last two-day candles, or 4 days, we have significant up movement in the total market. We don't have a crossover yet on the MACD, the Moving Average Convergence Divergence, but it appears to be getting close as the signal line and the MACD converge. We also have a significant falling off in the derivative oscillator, which is a light red rectangle that has gotten shorter over the last 3 periods. And of course, the derivative oscillator is shown in this light red line. It's depicted on about the middle of our screen. If you're listening to us on audio, we will do everything we can to explain what we're seeing on the chart. You can always track us on the charts by just going to chartingwealth.com or following us on Facebook and Twitter. We always publish our videos there. Thank you for joining us regardless of how you are. Now let's drop back from the 2-day chart to the 4-hour chart and see what we see occurring over the last few days in a half-day period. We see a crossing over occurring on the 9th in the afternoon, crossed over going up and has continued to track up since then. Significant movement. We are looking at it reaching the top of the Bollinger Band. It moved above the 2-day trend line way back about 3 days ago, and we've continued to track that as it has moved, and what we will continue to do is do that. Now, does that mean that we would think about getting into a trade right now if we were doing a virtual trade of some kind? No, we wouldn't. Why would we not? Because we haven't seen the move up confirmed on our 2-day, and our 2-day chart is our big chart. So what do we do? How do we know actually when the move is a real sustained move and not simply a feint, as we saw back around the 19th and the 23rd when the chart moved up after the Fed announced that it wasn't going to start raising interest rates for a while, and then when it did, it would do so very slowly, like a quarter point or so at a time. What happened? Well, after the market digested that, we saw on the 25th candle significant down movement all the way, that's the 25th of June, all the way through the 9th of July on that candle. So what are we doing right now? Well, we are watching. How do we know actually when we might get in? Well, once we see the 2-day chart crossed, we will wait for the 4-hour chart to then roll back over, going down, and then move back up again if indeed it does that. That would be the trigger that we would look for in order to think about getting into an up move if it is truly sustained. That is how we minimize our losses in an attempt to maximize our gains. I hope that makes sense. Now, let's go back to the 2-day chart, and we're going to take a look at the S&P 500, which is depicted in SPY, which is again the SPDR's S&P 500 Trust Series Exchange Traded Fund. We see very similar to IYY as S&P 500 typically is. It's 500 big stocks, not the total market, and you can see that it is a fair bit closer to crossing over going up on the MACD, as was the IYY, and we can see a significant candle over the last 2 days moving up. Again, moving through the 30 and the 34 period moving linear regression lines. Now let's drop back, take a look at the 4-hour chart, see what we see. Again, it's up toward the top of the Bollinger Band. We see the derivative oscillator continuing to heat up. We see significant moves up since the afternoon of the 9th of July. So again, what would we be doing right now? Well, we don't have a good buy-in point at this point. We did see the crossover on the 2-day trend line back on, what was that, the afternoon of the 10th. But again, just because it crosses over that, if we don't have a crossover on the 2-day, we do not look to get into that movement because it is not confirmed. We're getting close to a crossover now on the 2-day. Now let's go to the MACD on the 2-day chart, and we can see the MACD significant up movement today. Again, no crossover yet, but getting close on the 2-day trend line. And the 2-day, actually the 2-day chart, this would be the MACD, the moving average convergence divergence. We're looking for a crossover there. We can see that the trend line was crossed over back on the candle starting on the 13th as far as when we saw a movement up past the 2-day down trend line. Now let's look at the 4-hour chart and see what we see. And of course we see movements on the NASDAQ 100 or the QQQ up to the top of the Bollinger Band. And again, significant movement with the derivative oscillator heating up, and of course a crossover around the 10th going up. But again, we do not have the confirmation yet on the 2-day chart, and that is what we wait for. So we're going to now range back to the 2-day chart, and lastly look at what? Gold. What is gold telling us? Well, gold has been in a confirmed down move over the last many days on the 2-day chart, starting back on the 23rd, and it has continued to move down. In fact, even moved down on this last 2-day chart through the 14th. Gold was actually down today 0.23%. That's not 23%. That's just about a quarter of 1%. So a very small movement down, but nonetheless down. It has started moving down between the 19th and the 23rd on the 2-day chart. Now let's take a look real quick at the 4-hour chart and see what we see. And you can see that gold is still below the 2-day trend line. The derivative oscillator crossed over going down, and it appears that the 4-hour chart is crossing back over going down. And again, why don't we trade the 4-hour chart? Because we have things happen like occurred back on the afternoon of the 9th where it crossed over going up, but we did not buy an up position. We never saw it cross through the 2-day trend line, and of course it a few days later has crossed over going back down. We're continuing to watch gold. If you had gotten into gold back when it originally crossed over going down on the 2-day chart, that was back around the 19th. Gold was at a high of 114.30, and gold of course was at a low today of 110.63. So we're in a confirmed down move on gold. We of course are still in technically down moves on the total market, on the S&P 500, and on the NASDAQ 100. However, we are continuing to watch that very closely to see if tomorrow or the next day or two we're going to have a crossover going up on the 2-day chart, and then if the 4-hour chart rolls over going down and then tacks back up again, that might be a point to look at entering a trade on your virtual charts. And again, the reason I keep saying virtual charts is we are not a stock calling service. We do not give advice on trading. We're simply here to educate you, and we hope that you are practicing these trades and getting better and better and better so that at some point in your own training you feel comfortable to get out there and trade on your own. Thank you so much for listening. We always appreciate you listening to chartingwealth.com. Follow us on Facebook and Twitter. Make sure to go to our website and sign up for our daily newsletter where we send you our daily reviews. Plus, every Monday, you get our weekly review and forecast. Thank you so much for listening to us. It's always a pleasure. We love to hear your comments, questions, and concerns. We try to address them all the time we can. Again, chartingwealth.com. We wish you the best in investing.